Good morning, good afternoon, good evening, depending on where you are in this world. This is Hedgen Lee with a morning update for Bitcoin. I'm getting a little bit excited about Bitcoin because we're getting a bit of a turn of a buy signal coming on the MACD. And for those of you who don't know how the moving average convergence divergence works, in my prior updates, I've given very detailed assessment as to how they work. The 9-day histogram gave a first high or low, an indication of a turn. The white line in this case is the 12-day moving average, and that turned after the 9-day because the 9-day shorter, so it moves first. The 12-day, it's got 3 days more to it, turns more slowly. Now, the 26-day, which is the red, will then turn more slowly as well. So it could go like this for the 12 days. And for the red, it can go like this. So this is good and exciting. However, the price is something I wanted to let you know about a little bit. From a perspective of the landing zones, so I've always consistently said that 8,000 would be a good one. After that, another major landing zone will be 5,800. And then after that, it'll be in this zone right here, 4,612. I know that I had been drawing a wedge. Price has broken out of that wedge pattern, which is good. The next line of resistance is here. However, I wanted to see what other alternate scenario could there be. Is this way too quick to be the end of the bottom? And that scenario, I mean, from a 5-year climb, since 2009, from the genesis of Bitcoin to 20,000, is this really it? Well, I have the following count. I'll let you share with you. This is not my primary count. All I'm saying is this is something to consider. We have A, B, C. Now these are subwaves. A, B, C are the subwaves of a bigger higher degree of trend. A, B, oops, sorry. A, B, C. It is not minuscule. So these down, up, down that we've had recently to the low of 9,200 could be A, subwaves of an A, of a higher degree. And the bounce that we are getting to right around, let's say, 14,000 will be in the form of a very A, B, C. So we have the subwaves of red A, the white B. So this red A was a zigzag. 1, 2, 3, 4, 5 for A, B, C, 3 for B, 1, 2, 3, 4, 5 for C of A. And now the green ABC will represent the subwaves of B, which always has 3 waves. And if this is A, it was very 3-wavy, ABC. Let's go to the 4 hours. This was 1, 2, 3-ish, as you can see. This was 1, 2, 3-ish, B. Now C waves always have 5 waves. And that means this will have 1, 2, 3, 4, 5. 5 waves up. And if this goes green A, green B, green C, which are around 14,000 or so, let's say, right here. Because that's about where this line resides, this white line. If we see the indication of this being the primary direction, where we have now complete red A and the red B completes, we will get a decline in C. And that C wave I said here is always 5 waves. Well, this is a C wave, and this you will get in 5 waves. Now, many might have their moods fouled by something like this, but I'm calling it as I see it. My objective is not to make you feel good and feel happy all the time with what you want to hear. Again, this is not my primary count right now. I'd like to see how these waves impulse, but this is an awareness factor that you should have. So, what would I do? If B is really happening, and we see 1, 2, 3, 4, 5, and this is very toppy, and it's about to curl over, especially if the MACD for example, does this. Yes, we get that buy signal for the B, goes back down, but perhaps doesn't do a lower low, almost there and then turns. One more time. And the red line. And then we get a second buy signal at the bottom. Something to that effect. We may actually get a higher low on the MACD. If this is what happens, if this is pretty much what happens, then the key would be to raise cash at B. If this is an ABC, B bounce at the top of 3 or 5 of C of B, 5 of green C of red B, you might want to raise cash and redeploy that cash here. Now this C points the 8,000 mark. The 8,000 mark is a 0.618 Fibonacci. And this here is around a 0.78. Six. I don't think 0.618 will be the end of it. It wouldn't be long enough. At the very least, it'll be equal to A. It's a zigzag, 5, 3, 5. So I would be putting this at 6115. Let's make it 6100. Easy math. So again, if we see the indication of this, where the 1, 2, 3, 4, 5 gets toppy and starts turning, raising cash would be advisable. And that cash redeployed here would be pretty interesting. Actually, it'd be quite good, quite attractive to buy at these levels. Now, if you go to the coin market caps and look at the total market capitalization, you may see this. What I discern is a potential, and I say potential because it's not complete or confirmed yet, but it seems pretty uncanny so far. A left shoulder, a head, and a right shoulder with a neckline. We should be getting another big bounce, and that could complete the right shoulder. If it declines and the price goes below the neckline, minimum standard measurement would give us about $270 billion market cap size. I find this now jives well with what I just told you earlier. And that is this head and shoulders is being confirmed so far by the volume. So if we get this rise, and Elliott wave shows that the rise we might get to maybe 14,000, 14,500 or so, looks very toppy and starts turning, raising cash would be something that I would do in my portfolio. I cannot tell you what for you to do. I'm only giving you my analysis for the augmentation of your own due diligence. Your decisions must be self-made. I cannot and will not make it for you. I'm only giving you my analysis. Again, this is not complete, nor is it confirmed. This will be complete if the right shoulder is finished. Confirmed if the price declines below decisively the neckline. All right, back to this. I am not again saying this is my primary account. No. This I'm bringing to you for awareness. As soon as we see the turning, if there is a turning, from a toppiness to an impulse start, raising cash is something that I'm planning on doing if those conditions are identified. All right, I've thought about this for quite a while before sharing it with you guys. And now here it is. If you have any questions or comments, please let me know. You shouldn't panic. And if you want to throw jabs at me and blame me for changing this and that, ask me if I care. I don't. I'm calling it as I see it. And you do with it what you like. And I know that analysis like this could foul some moods. Not my problem. It is only meant to augment your own due diligence. I truly hope this will be helpful to you and informative. Thank you and have a good day.